7% uptick in revenues, EBITDA up about 10%. You could argue that some of the line items were in line. Net profit marginally lower maybe relative to what was estimated. Thermax is the stock we are focusing on. And before we get the management, let's get in my colleague Anushi to tell us about the highlights for the quarter gone by. Anushi.
Hey, morning Neeraj. So as you mentioned that the major numbers that we are looking, line items such revenue and margins are in line, while it's net profit where we have seen a slight bit of miss in terms of where the estimates were concerned. Now let's talk about the revenue growth of 11.6% that we are seeing, mainly growth led by the industrial infra segment, industrial product segment that we are looking at, along with chemicals that is there. In terms of our order book though, we did see about Q4 orders were down about 8% at 2,119 crore. But if you go back to the Q3 conference call, the management did say that they expected around 3,000 crore plus of orders. So that is one bit of question that we need to focus on. If you talk about the overall FY25 order inflows, they were up around 11%, while the order balance was up around 6% at the mark of 10,693 crore. Now, if you talk about the margins and how the picture was over here, higher technology intervention cost of rupees 66 crore impacted the industrial infra segment that we are looking at. It's also the chemical segment profitability was lower due to higher input cost along with some change in product mix which we are seeing. Overall revenue growth was led by industrial products segment that we are seeing. Industrial infra was up around 4%, while green solutions and chemicals saw about a revenue growth of 4% and 36% respectively. So this is the overall picture that we are seeing for fourth quarter and FY25 in terms of where the Thermax numbers are concerned.
Thanks, Anushi. Thanks for that. And viewers, the lovely part about talking to Ashish Bhandari is that he calls a spade a spade. He's the Managing Director and CEO of Thermax, joins us right now on the show to talk about the quarter in the year gone by and the outlook ahead. Ashish, great having you. Thanks for joining in at the outset. I hope all is well. Some of the quarter, Ashish, I mean, did it kind of live up to what you had penciling in at the start of the quarter, or were there a few niggles and a few pluses?
So overall, the quarter was full of action. There were some things that lived up to my expectations, where we even did better than my expectations, to be fair. And there were two specific areas where the quarter did not live up to my expectations. I'll start with what did not work well. And I think Surbhi was referred to one of them. When we started the quarter, I talked about I would like to see 3,000 plus crores in revenue, 3,000 plus crores in orders, and 300 crores plus in profitability. On the revenue side, I'll come to that next. On the order side, we were far away from what I had suggested and predicted. And this is largely to do with industrial infra, where we have had a few big opportunities in the mix, and I had expected some of them to start showing up. There was one particular order, which was 500 crores plus, which was high probability, and we lost that. And there were some others which were in the mix, which got pushed out to Q1. The second thing that did not work well was we have had a couple of new areas of technology intervention, particularly bio-CNG, which has been in the discussion before. That now we have looked to settle our books, come to some sort of baseline understanding of what the downside is of all the interventions that we want to do. And I can go deeper into this if needed. And for all the future interventions that we want to do, we have taken this as a one-time hit on our books. What worked very well was we did get cross 3,000 crores in revenue. And when we do that 3,000 crores in revenue, converting that into profitability and making sure that our backlog is good, we have shown a fantastic ability to do that. And you can see that despite taking this one big time hit, we were able to cross that 10% in profitability. Otherwise, our numbers would have been much, much better. How do I look at 26? I think the order situation is one that I have a close eye on, and especially on larger projects, which we would like to see. The pipeline continues to be good. So I expect a good Q1 and a good Q2 continuing. And even on the international side for projects, we have a decent pipeline as we look at this year. So and then I would like to see, sorry, go ahead.
No, please finish your point.
No, and then I would like to see continued good execution of the kind that we have shown last year, delivering revenues, converting that revenue into profitability.
Got it. Okay. So Ashish, I heard you twice talk about the order flows. One saying that some of them have been pushed forth to quarter one, but that you are keeping an eye out on the larger orders. So is quarter one going to be a series of smaller order win victories, and are there some numbers that you're working with, or would you reckon you'll close some large orders as well?
There are a couple of large ones in the mix, but there are some medium ones which are 250 to 500 crores in the mix, and there are multiple medium ones. So, and those, I think we've closed one already. There's one more which is imminent. So there we are starting to get the twos and the threes, I would say. The fours and the sixes are also in the mix, but that is towards the later part of the quarter. Yes, towards June and July. And but I'm expecting and taking those in our estimates for the first half of the year for sure.
Ashish, hi, good morning. Tamanna here, and glad to speak with you again. I just want to go back to that 500 crore rupee order that you talked about, which is brought that slide in, because in your Q3 con call, you've talked about a 3,000 crore sort of order book. Where is the, not substitute per se, but where is that gap going to be filled in with? Is there enough in the pipeline that looks like it will fructify?
Yeah, there is enough in the pipeline. Yeah, there is the entire power sector in India is going through a resurgence. There are multiple projects on the power side, which over the last 2 quarters I've been talking about, and they're getting, many of them are getting closer to finalization. Steel, which is where we had the loss last quarter, but there are multiple other projects in steel which are also in discussion. And on the international side also, our pipeline is decent. So 3 areas where we think, and as we get into the later part of FY26, refining and petrochemical with the Bina refinery and even RIL and Nayara both going through projects, we will see a bit of resurgence there as well. But in the first half, it's power and steel and international.
Okay, in terms of your segments as well, this quarter, what seems to have really fired is chemicals in terms of revenue growth, even green solutions to some extent. Is this the big bet going forward?
So before I talk about those two, actually industrial products has been the biggest growth engine for Thermax. Yeah, every quarter after quarter, consistent growth, consistent profitability. And you can see this quarter as well, the profitability percentages were the best the business has ever seen. Yeah, so best top line, best bottom line, and consistent performance in terms of how it works its backlog. And this has been kind of, distributed across multiple sectors, across multiple industries, working through channel partners and the like, working internationally, all of that mixed in. Chemicals, I would say we did not do as well as I would like to see. Yeah, chemicals we would like to see growing much faster, well above 20%, not below 20%, and delivering that number profitably. We are investing heavily on the chemical side. We have added capacity. We are entering new segments. And we are adding base cost to develop sales teams and marketing and manufacturing capability for those new segments. So I would like to see that place chemicals grow much faster. Green solutions, because the base is small, will continue to grow. And even at the back end, even in areas like hydrogen, which show zero revenue right now, are all areas of major investments for Thermax.
I just want to talk for a second about margins. Not that there's some massive erosion, but there is to some extent, Ashish. Is that a function of higher input prices? Do you see this easing going forward? What is the kind of margins outlook for the financial year?
This is if you're talking about across Thermax. Yes. Actually, I'm very happy with margins. Yeah, we have shown if we take those one-time costs away, especially, I mean, you take last year, we had 150 crores in bio-CNG that were taken away in our FEPL, our solar, wind, renewables business also. There were some losses. But the bio-CNG ones, if I just keep them aside, across all our entire portfolio, our profitability is inching up quite nicely, and in industrial products going up much nicely. So happy with how we have done on profitability. Of course, in the aggregate number, would like to see us doing even better, and which is primarily to me is making sure these one-off, which are very much part of operational expenses, we don't see those hits coming in.
Got it. Okay, Ashish, unfortunately we are out of time, but I would love to maybe between this and the next conversation talk about this bioenergy thing that you spoke about, and maybe that gives us a chance to also talk about how is the capex situation looking like. So would love to talk about both of that.
And that's an important discussion as well. Look forward to having it.
Yeah, perfect. Thank you so much for this today. All the best for the quarter and the year, of course. Well, confident Thermax, I must say, on what the order inflow situation would look like for FY26 and maybe even execution, which of course I think stood out well for FY25. We take a break, come back.